stocks are lower in the session as Wall Street braces for Election Day. And for more, let's welcome in now Michael Kantrowitz, Piper Sandler, Chief Investment Strategist. Michael, always good to see you and have you on the show. You know, talking there, Michael, I've heard it with Julie about how much we have coming at us. You got the election and the Fed, and we got a deluge of earnings on deck. What is the advice you're telling clients here, Michael? You know, is it best to just kind of sit tight for now, given all that news that's coming?
Yeah, indeed, and buckle up. There's quite a bit of volatility catalysts beginning this week, even last week with the payrolls number. And earnings have been very mixed. And so we're seeing at the single stock level a lot of volatility to the upside and the downside as well. And so hopefully we'll get some clarity this week on one of those issues, definitively, the election, and investors can position from there. But we've been recommending to not take huge bets because, Josh, as you mentioned, it is quite a toss-up. There's definitely idiosyncratic areas like EVs, financials and industrials that are more sensitive to the different policy outcomes. But given the tightness of the race, we don't hear that investors are taking big bets right now.
And I mean, is that sort of historically the right perspective to take too, Mike? Because if you look at, there was an interesting chart from Seema Shah over at Principal Asset Management where she helpfully shades the Republican and Democratic administrations going back more than 50 years. And the line pretty much goes up. And in particular, she points out during each of these administrations, you pretty much ended up with double-digit gains in most cases. So for long-term investors, do you discount the election, or how do you sort of contextualize it?
Yeah, well, we always have to take into consideration where we are in the business cycle, what is the Fed doing, and what are markets currently pricing in. You know, some elections have happened at major inflection points in the business cycle, like the early 2000s election and the early 08 election, where we were going into recession. So you had changes in government and changes in the business cycle. Today, as we sit here today, we have a financial market that's pricing in a lot of good news and not a lot of risk at really high valuations. So I think that's really important context.
One wrinkle that's interesting, Michael, I'm curious to get your take on this, is now, of course, we're discussing the possibility of a disputed result, a delayed result. And I'm curious, if that happens, how do you think the markets react? Do you see a big bout of volatility, sell-offs, or no? Josh and Michael are talking about it right now on camera, and in some sense, the market's ready for it.
Yeah, I think, there's some concern and angst that's a possibility. We may not know for a few days, certainly some counties. So I don't see that being a major catalyst for a sell-off necessarily, because if anything, it just kind of continues what the backdrop is now, which is a lot of uncertainty. Obviously, if it becomes more of a social issue, God forbid, then I think there'll be something more to concern about. But, assuming that the process goes along without too many hiccups, I don't see the markets having a big negative reaction.
Right. Yeah. I guess if it just becomes a bigger social unrest issue, we got bigger fish to fry than what's happening with stocks. You talked a little bit about the sort of specific sector or even company-specific trades. And I know both you and other folks at your shop have been doing a lot of work on that piece, right? You put out a note recently where you highlighted maybe if Elon Musk does end up being that sort of commissioner of cutting, or whatever you want to call it, and cuts a bunch of costs, maybe you could see some companies affected. Conversely, if Harris wins, there are some companies that could be affected. How far out are people putting a lot of money on those various Trump and Harris trades, so to speak?
Well, I think there's more money being put on so-called Trump trades. We've got if Harris wins, it's more or less status quo. So there's not a huge amount of beneficiaries in that backdrop. However, if Harris should win, I think it's more of a risk to the unwind of the Trump trade than anything else. If we do get a Trump victory, that's certainly good for financials. It puts a risk because of tariff risks on companies that have a lot of overseas exposure that are manufacturing and importing back into the U.S.
And when you talk about the Trump trade, Michael, what specific sectors, trades are you referring to?
Well, financials is definitely the standout sector between, the potential for higher interest rates on the long end and deregulation, that is a sector that I think as investors have been embracing for a number of reasons, i.e. we're not going into recession, that the 10-year bond yields aren't going down as much, the yield curve is steeping a little bit. And so if Trump wins, you get the tailwind of also a pretty big decisive deregulation, which is certainly something that has changed since his first administration.